I just want to start with the recession outlook for 2023 and what you're forecasting, because I don't know about you, with the S&P 500 down more than 20% so far this year, I'm ready to look ahead to 2023.
Yeah, and the data actually looks a lot less recessionary than it did, 3 or 4 months ago. I mean, the big story here is that inflation expectations are falling, which means people are going to spend less money on the things they want to buy, but wages don't look like they're going to fall as much. So for the average consumer, they're going to get a stronger wage increase. The things they buy are going to be going down in price, not going down in price, but aren't going to go up as much as their wages. And yet jobs are really plentiful. And when you add that all together, it means the consumer is stronger. And if the consumer is stronger, the likelihood of a recession in the next 6 months or so is less than everybody thought it would be. And that ultimately is why we had this big jump of a stock market rally since early October. Obviously, December, it's rolled over a little bit.
Well, explain that, though, Jonathan. I mean, why do you think sentiment shifted so much coming out of that rally that we saw late summer, early fall into where we are now?
Well, it's more than anything else. It's, as like I said, it's this twin issue of the job market being so strong that people are feeling really confident in their ability to make a capital purchase, whether that's remodeling their kitchen or buying a new home or whatever it is. And then the second thing is CPI is expected to fall to 2% roughly this time next year, and that means the market is of the belief that no matter what the Fed says, the likelihood is that the Fed is going to ultimately get closer to their inflation target when we leave 23, and that's a positive, and that's what the market is ultimately fixated on. And I think that's why stocks are going to do pretty well over the next over the next several months.
Jonathan, so do you have a forecast out for the S&P 500?
We do. We have a 40-50 forecast, Carol. But I think the more interesting story is that while initially there's going to be this optimism that I just talked about, ultimately, if wages stay high, which is what I also said, the Fed's going to eventually have to get involved and bring that down. So the general public or even investors on Wall Street, I think, are going to be really happy with falling inflation. But the Fed has a longer-term issue with sticky wages, which ultimately is going to prove to be a problem, but probably later in 2023 rather than earlier.
Okay, so given what you've told us and the research that you've done at Credit Suisse of late, give us an understanding of how this kind of translates into what happens to tech stocks in 2023, because 2022 has been a brutal year. And look, if rates stay high, that could be tough for growth stocks.
Yeah, I think a lot of people, Tim, are focused on the idea that tech was down because of interest rates or sentiment. And I don't think it's that at all. They're really having a hard time on the earnings front. I mean, and the story there is pretty simple. When we were, all staying at home because of the pandemic, what do? We bought laptops and we bought tablets and we bought streaming services and we bought home exercise equipment and we did all these things. But when we pulled forward all that activity, what you're left with once the economy opens up, that we start going on vacation and doing other things, and those purchases have a shortfall, and you've seen a real softening in demand for technology, and that has ultimately, and you're seeing that in the chip market, you're seeing that elsewhere, and I think what's going to happen is it probably has another several quarters to go before it runs its course, and that means that earnings are going to be rough again for the next several quarters for tech, and which is one of the reasons why I'm not upgrading the group. We downgraded in early 22, and we're going to leave it there.
Okay, well, so where are the overweight positions? I mean, where do you think people might actually find better opportunities for that price return?
Well, so let me start with what we don't want to do. So I would love to buy tech, but the earnings, like I said, are a problem. And if I don't think there's a recession, you don't want to buy defensive shares. So you don't want to buy consumer staples or healthcare or utilities because they do well if you're going into recession. So the first thing is it forces you into more cyclical parts of the market. My favorite by far is the energy sector.
Even after 2 years of crazy gains and way outperformance, Jonathan, you think that's still a play?
Yeah, and Carol, it's not a look at what was their stock price movement.
Yeah.
Take a look at what the PE is on these energy companies. The reason the stocks are up is because their earnings have been insanely strong. What's probably the most interesting in the last 2 months, when oil prices have generally been falling, the earnings expectations for oil companies have actually been rising. So there's I think there's a lot of good news on the energy side. And then the second area, like I mentioned to you before, was the consumer. We think actually holds up pretty well. So I like the cyclical group in general, which would include industrials, but my two favorite in that area would be energy and consumer.
Hey, just quickly, would you buy airlines? We've been talking a lot about airlines, and Romain was, highlighting that despite everybody saying we're all flying, those stocks are really beaten down. Would you be a buyer of airline stocks?
I would be a buyer in general of travel companies. I mean, there's a very different dynamic in airlines. One of them, which you folks are saying, is why have hotels done so much better? And there's different issues with capacity. Mm-hmm. But if oil prices do go up, that is a drag on the airlines in a way that it wouldn't be a drag on a hotel. So I'm not sure. I'm not being a consumer analyst, I'm not sure that I have the ability to say, is it restaurants, is it hotels, is it cruises,
right,
casinos, airlines? But I like the group in general. Yes.